The Hedgeless Horseman here. It's January the 16th, 2025. First of all, thanks to the sponsors. Uh, I thought I would cover a bunch of different topics in this video. Look at some companies and, some investing theory and recent news from the sector as well as some companies. First of all, gold was up today, silver was up today. So, I mean, it's been a really good week. And again, it doesn't really change much for the value of the companies. I mean, it's an exploration story. Who cares what gold was today? Who cares what it is yesterday? The final value is going to be, I mean, the company's success and then whatever the gold price is at some distant time that it's impossible, of course, to know. It's just that if we buy cheap enough, I mean, again, it's like what Pierre Lassonde said a few months ago, that the juniors are pricing in a gold price of $1,600 or $1,500, and the gold price at the time I think was 2,500 or 2,600. So I mean, in that sense, it's just an unreal margin of safety basically. If you buy something, it's pricing in whatever $1,600 gold price or $1,700 gold price. I mean, unless the real price of gold goes below that, you bought it cheap. Uh, and if it doesn't go below that, obviously you bought it super cheap. Um, and one thing I would just like to also point out is like, I mean, I find myself going almost insane. I mean, I pretty much want to buy everything. I mean, I am in full, and I have been, of course, for quite some time. Well, almost since 2015, but increasingly so now. I mean, I'm in full hoarder mode. Real assets are just going up in value, and I think I read somewhere of peak gold production hitting this year or next year. I mean, of course, there's no guarantee, and I mean, almost all gold that's ever mined is above ground, but it still just kind of shows that, I mean, it's been getting harder and harder to find stuff, harder and harder to permit stuff, and I mean, peak supply would hit, or peak production would hit copper and stuff harder. I mean, since it's on the margin, it gets used up. Still, I really like that idea that, I mean, producing assets of gold, etc. I mean, they're especially producing in tier one jurisdictions. I mean, they're getting rarer and rarer. It's like, I mean, how many cases are there out there? How many projects are there out there? It's like ready to go, or almost ready to go. I mean, there's not a lot of them, and there's very few very large ones. I mean, obviously, you have Snowland Gold, for example. That's in a very remote place in the Yukon. I mean, when that will actually get into production, I have no idea. 10 years, uh, don't know. But the point is, again, it's like, yes, that's a world-class asset, but it's very remote, and not often do companies find world-class deposit in Nevada at this point in time. But my point was going to be actually that I'm constantly torn in a sense. I mean, some days I feel like, oh, I want to get more silver exposure because, you read something about, hey, I think I saw a slide where it's like 86% of all silver production now goes to industrial uses, which I think is probably an all-time high actually. So vast majority, if I remember the numbers correctly, vast majority of silver goes to industrial uses. So obviously, if the investors or whatever retail speculation would kick up again, I mean, there's simply not that much silver being produced, at least, to easily meet that demand. So and what happens when, I mean, since, let's say, if that keeps increasing with solar, etc., I mean, isn't that going to put some pressure to the upside? Or it's like, there's less and less uh, ready supply out there. So when I think about that, I want to be more in silver. It's like I personally would prefer to buy physical silver over gold now. It's just I shouldn't say maybe problem, but for the longest time, I think gold juniors have been cheaper than silver, and as we know, gold is pretty much at all-time high, while silver's all-time high was $48 or $50, and it's at 31 now. I mean, it's not a bad price at all. I mean, most I think silver miners are making money, but it's like the gold miners are making record money. So all else equal, an ounce in the ground is at the highest value ever it's been in gold. And then, of course, the kicker is no gold is worth anything if you don't get to produce from it. So I mean, a permitted gold mine in production now has never been more valuable, all else equal, because the margins on said gold production have never been higher. And that's what I think I've talked about a few times last several months. That obviously I think it kind of means that probably the biggest opportunity in a sense from a risk reward perspective is that or the advanced juniors, gold juniors, in the sense that the producers, at least the ones with, let's say, I was going to say a serious asset or serious production, or a long-lived mine life, something along those lines. I mean, they're not like super cheap. I wouldn't call like Newmont or Barrick or Agnico, etc., B2, whatever. It's like they're not. They might be cheap, but it's like it's not like what is the market smoking kind of cheap. It's not like, oh, it's trading. They're trading way below sunk cost, and it's like, oh, PE of 3 and stuff like that. They might be, kind of cheap, but they're not ridiculously cheap. But the juniors, I think that's because the juniors are super cheap, and of course, for something to be cheap, it has to actually have value. It's like everything is down in price or at low prices typically in the junior sector. I mean, most juniors have gone down over the last 4 years while gold has gone up. That doesn't necessarily make them cheap, of course, because you can have something that's basically worthless and it's selling for $10 million, and that's still overvalued because they don't have anything. And they're probably never going to have anything. Then it doesn't matter what the gold price is, etc., etc. So that's a low price or a low market cap, but it's not necessarily cheap. But the stuff out there that is like, decent quality to high, I mean, a lot of that stuff is cheap. There are some exceptions, but I simply, don't really own them. My point is that if we have a situation where juniors are really cheap, mainly because of the complete lack of retail interest, and I mean that's a good thing, because that means, I mean, that again, if it's cheap, it's a good thing, because it's never gonna stay cheap forever. I mean, you can just look out there again, record cash flow, yada yada. You see M&A kicking up. The point is that I think, okay, if producers are typically or on average trading at pretty decent valuations, let's say, and you have juniors that are like super cheap, for example. And we have record cash flow in record margins in gold production. Hence, why the sector is doing very well. And I mean, some companies do actually, or many producers, I do think that gets recognized, not maybe to its full potential, but at the same time, I can understand that anyone looking at gold producers, like, you don't want to pay too much because it's a cyclical sector, and anytime the producers have had good margins, I mean, sooner or later they're gonna F it up basically, or the gold price is gonna go down. So it's probably a lot of scarring left from 2011. But if you can find juniors that are like basically making that transition in a sense, that they're priced like the average junior, but they're about to actually monetize the gold in the ground, which again has record high value right now. That's something I'm very interested in. So I mean, me personally, I really like let's say gold assets in Western jurisdictions that are either permitted or could be permitted, and preferably long runways for growth, cash in the bank, and all that. Because if you think about it, I mean, I talk about hodling all the time, and I talk about having longer time horizon than the market. And that's not too hard today, but at the same time, we are probably the most impatient we've ever been. It's like, seriously, it's like, if I think, or I look at a company, it's like, oh, somebody says, oh, no point in buying this because there's not going to be any news for next 3 months or something. The initial reaction is like, oh, Jesus, that sounds boring as hell. Because like we're attracted to that, of course, to make as much money as quickly as possible. The problem is that that's what everybody's looking for. And also the problem is that, yeah, I mean, it's a crowded place in a sense. So if everybody's looking at the next news release, the next imminent news release, and that's basically what dictates a lot of the share price. I mean, obviously, if there's a positive news release or expected positive news release 3 months from now, and nobody cares, so it's not getting bid up, but you think, well, in 2 months and 3 weeks, people are going to start to care. And even if you think that the price is going to be 10% higher, for example, I mean, the best part is if it's already cheap, so it's like you're not necessarily taking any risk. Regardless, basically, it's not like you're basing your entire case on that next news release or a potential bump up until that news release. But when you think about it, like a 10%, if you could just to be a bit more patient than the market, that you buy when nobody cares about the next news release, let's say that's 3 months out, 4 months out, the next, or that very news release comes along, it's like shortly before that, let's say the share price is up 10%. That's actually, I mean, from a compounding perspective, that is insane. 10%, if you could average 10% every quarter, you would be rich as hell in 15 years if you started with, not too much money actually. I mean, it's an insane compounding rate, but in practice it's just too boring, so nobody actually does it. And that's also why when it gets when it becomes imminent, then typically the price goes up. And I've talked about this before, that we haven't had shorter time frames than now, basically. But anyway, so it's like sometimes I feel like buying silver juniors, silver miners. Sometimes I feel like taking exploration risk. Sometimes I think about, hey, long pipelines for growth with margin of safety, advanced explorer, a developer, yada yada yada. And sometimes I think like, I mean, I get inspired in a sense that, you think like an owner. It's like, okay, if I own this, it's like, would I like to own this? I mean, I've talked about First Nordic a bunch of times. To me, it would be like, I would like to own their assets personally. It's like 100%. You own an entire belt. You own the largest gold deposit in Sweden. That is probably going to be an absolute fantastic mine that makes a lot of money, especially at this gold price. Everything points to that. You have, margin of safety. So it's like, that's a quality asset. That's not necessarily just flipping paper. I mean, most people obviously buy a stock and it's like, oh, they look at it as a, piece of paper or a digital piece of paper. It's like, I hope I can sell it 20% higher. That's not coming from, like, would you actually want to own this, yada yada. You're just looking at the short-term paper profits. So sometimes I'm in a mood for that, and then I look at, companies or cases where it's like, ooh, this would be super cool to actually own. Imagine if this is the start and this is going to turn into a gold camp, for example, down the line. It's like, fast forward 5-10 years, maybe whatever case you might be looking at. It's like, oh, they should be in production and maybe they have 10 million ounces. And it's like, that would be super cool to have been early and be a part of that. Like, it's obviously going to be hard to be a significant owner unless you have a lot of money, like a significant shareholder. But it's like to have been at the ground floor, and maybe in 5 years they make as much money in free cash flow as you've paid for the entire company today. So you're trading at a forward PE, or P to free cash flow of 1, assuming also gold goes up. Maybe, I mean, that's an extremely enticing idea, because when I think about how cheap I'm gonna, fast forward 5 years and think about how cheap I bought an asset, a quality asset that actually turns into a business, and it's like, uh, just reminiscing. It's like, oh, I bought this company for, let's say, 200 million, and it's like they have 200 million in free cash flow 5 years later. I mean, that would be so cool to think back on, and obviously that would be multiples higher as well, because if they're making 200 million in free cash flow, they're not going to be trading at 200 million. They might be trading at, I don't know, 1.5 billion, for example, or more than that. So you'll obviously make money. But it's like the idea is just very enticing. But then you filter in a different way, obviously. Then you might not care too much about pre-discovery plays, early stage exploration plays, or whatever. So I oscillate a lot, for better or for worse, because I get inspired sometimes. Maybe you watched an interview with Warren Buffett or something, and you're like, you start to think like, oh, I mean, yeah, you should look at companies or stocks as like partial ownership of businesses. And when you look around, it's like, what's an actual good business? Because there's obviously, if you had the lens of like, okay, what story is exciting and do I think can move share price wise within the next 6 months, that's not necessarily the one where it's like, oh, I'm getting margin of safety. I could see a business here that would last 30 years, if you know what I mean, because they don't even have a business yet, at least. So I oscillate a lot, and it's like depending on, yeah, my mood of the day, I was gonna say. And I would also point out, it's like I'm so bullish. It's like 2015 doesn't even come close to this, and I'm gonna get into that. But to keep myself sane, I kind of do micro trades now and then. Absolutely not every day, but there are days where I trade point oh, I don't know, 0.001% of my portfolio. Uh, Simply because, let's say, one stock is down that I don't think should be down, and I always want to feel like I'm taking advantage of the market in a sense. And then I might sell 0.001% of my portfolio. Let's say I sell 2,000 2,000 shares of some company that's not down. Maybe it's up on no news, and buy something that's down 6% on no news. Or it's like yesterday or some maybe 2 days ago when silver was up like, what was it, 3-4%, and as people complained about, the silver producers aren't moving. Well, I did a micro trade or some micro trades and bought a silver producer, because all else equal, that company got cheaper for a fact, because at least on that very day, like yesterday, they made a bit more than they did the day before, in a sense. Even though if price goes down to the same point in a day, so there is like a microscopic amount of value added from the silver price being 4% higher in just one day, so 1/365th part of a year of worth of production. Still, it's just as a matter of fact, kinda, that all else equal, the value did increase at least. And of course, there could be a situation where it was overvalued to begin with. So even if silver price went up, it didn't actually get cheaper. But if you think it's already cheap, or it might have gotten cheaper, but it wouldn't be cheap, it might be less overvalued. But if you think it's cheap the day before, and the silver price goes up 4%, and the share price of some silver producer goes down, I mean, de facto it's a bit cheaper. So I do micro trades just to keep myself sane in a sense, because there I have no worse fee. I mean, I almost never have dry powder because I invested immediately. Soon as I get money, I buy the cheapest stock I can come up with that day. And I mean, my dry powder lasts typically one day, maybe two. Because there's so much stuff I like to buy more of, and stuff that I'd like to buy that I don't even have a position in. I have quite a few like microscopic positions. Because it's I just, I mean, if I look at 20 companies and all look like buys, even though I don't really have any dry powder, I might sell like 0.1% of some other position just to take a nibble in those 20, or at least a few in those 20. Because I mean, I can't help myself. I want to own everything. Everything that's cheap, I want to own. I wish I had, if somebody gave me a couple of $1 million, I would basically have no problem investing that at all. Because there is so much stuff that is so incredibly cheap. Anyway, yeah, I mean, consider this. It's like inflation is up because there's so much whining still. And I mean, personally, I think we've been in a bull market for, I don't know, 8 months. I don't know exactly when the average junior bottom, let's say. But I think we are in a bull market. And I think a lot of people don't see it that way, even though a lot of I mean, some juniors from the, let's say, 12-month lows or 52-week lows, I mean, they're up like hundreds of percent. And I don't think they'll be going back there, unless for maybe a short period of time if there is a flash crash in the market or stuff like that. And then what typically happens, of course, something, I mean, if shit hits the fan, there's going to be a whatever, first margin call liquidation selling, and then gold price might go up even more, whatever, and then you have like the fattest rallies ever. But that's a luxury problem to have. So if I have something that is extremely cheap, if my biggest fear is that for no other reason than collateral damage from other markets going down, if that's the reason for a stock price decline, I mean, then that's not risk. I mean, it's a risk if you have, your own margin. But if, I mean, let's say you have a gold producer, there's a liquidity event, markets crash, it goes down 40%. Gold didn't really move. Their margins are the same. The price went down 40%, and it was cheap before it went down 40%. Is that really a problem? No. Is it gonna hit your portfolio in the short term? Sure. But if they're more, if their margins are the same, and it's like maybe gold goes even higher afterwards, I mean, you're gonna get that money back. So it's just borrowed in a sense. The market is borrowing money from you. What is real risky is you actually overpaid for something that should go down or stay down, or something happens that drops the price of or the value of the company below what you paid for it, or below what the current market price is, that it should go. You should never get your money back in that case, in a rational sense. If you bought a stock at $1, you thought the value was 2, and you think it's just a matter of time before I have 100% return. Might take months, might take years, but that's your case. News happens, value goes from $2 per stock down to 50 cents per stock. Obviously, per share. And nothing changes that afterwards. Then if you hold it at $1 and don't sell, you're in for a 50% decline. It should go down 50% and stay there, if that's the new value. That's risk. That's a problem. Something that is worth $3 per share, selling for $1 per share, that goes down to 60 cents per share for a short period before it inevitably reaches $3. You didn't lose money. You lost money on paper for a while. If you sell after it's gone down 40%, then you basically made that paper loss permanent. And that's of course what a lot of people do, because they think the market is always right in a sense. But But I've heard that for the last 2 3 years. People are chronically worrying about the market crash. So far, we haven't seen one. I'm expecting a market crash any day, but I know it's impossible to foresee that. Everybody tries and everybody fails. And again, if the worst case is that we have a market crash and my portfolio goes down on paper for a while, like the flash crash of 2020, for example. Gold and silver didn't go down that much, especially not gold. But miners, even the producers, I think dropped 50%. Then it turned around within, I don't know, a month or whatever. It made all the returns back in 3 months. And then went on to set, gold went to 2000 and miners had one of the best rallies they've had in years. So did you actually lose much? I know traders who sold the bottom during the crash. They sold when stuff was down 40%. They missed out on they lost money because of that flash crash. My point is that if irrational volatility or irrational price decline, that by the merit of intrinsic value kind of is destined to be short-lived. If that's the biggest risk, then there's not much risk. If you can suck up having a paper loss, which you have to in this market or in this sector, that's not really a problem. Again, if you sell at the lows, that's a problem. But everybody's been fearing that. So let's say you didn't buy junior whatever 6 months ago when it was trading at 6 cents. Now it's trading at 20 cents. But you didn't buy because you were, the mood was sour and you were afraid there's going to be a market crash that could. That's really the reason why people sell. People sell low because they always think it's going to go lower. That's it. You can tell. It's like any time. Most reasons people give to sell out of a sector, whatever, is because they never think it's going to go up. And by that definition, it's always going to go lower, or at least stay flat. I made tweets about this. I have seen a bunch of people throw in the towel, but I've never seen somebody throw in the towel in the last, let's say, 2 years, referencing that there's nothing out there that's undervalued. No, they just think price is never going to go up. Which also, ironically, is what everybody thinks at every cycle low in the mining sector. Yet you can look at a 100-year chart or a 5,000-year chart, whatever you want. This sector has been around since, the dawn of civilization, and I don't think it's going away anytime soon. So for, let's say, 5,000 years, or since humans started mining, it has never had a permanent bear market, and not once. Because we're still mining. We're mining at record levels. But that's something, for some reason, people forget, that they think this time is different. They believe the bullshit. I've seen some people say that because juniors are so cheap, the market has to know something. And that's, they're basically making up reasons to do what they feel they want to do. That's how typically humans operate. We do what feels good, and then we rationalize it. It's not that. Obviously the thing to do is that you do what's rational, and don't care about what you feel. Typically you're gonna feel bad even when you could do the best buys. So in reality, if there was one like rule of thumb, it would be buy when you feel shit. The funny thing is, like, this is not my first rodeo. I've had plenty of big corrections in my portfolio. The funny thing is, like, I know it's gonna turn around. So anytime my portfolio's done crap, I know it's like, well, I'm gonna make this back and then some, which so far is always happen, and it will keep happening unless the mining sector goes away, or we simply mismanage risk to a large degree, let's say. Other than that, if you're somewhat diversified, above average due diligence and patience, you're gonna make money in this sector. But going back to my actual point, inflation is up a lot last 4 years. People are saying coffee is up, I don't know how much, 60%. Uh, I'm trying to come up with, food overall up a lot. So basically, you get less food for your salary, even though your salary is probably gone up too. Gold price is also up a lot, right? I mean, in 4 or 5 years, it's up from, I don't know, $1,700, something like that, to $2,700. That's up a lot. Gold pickup from the ground has record value, record margins. Again, gold miners have never had higher margins, and that is the value of an ounce in the ground is how much you make from selling it, and then subtracting your costs and everything. That's your business. Sell gold, pay your whatever uh, employees and all that equipment. What's left over is what you made on that gold ounce. That's the value to your business for that gold ounce. That has never been higher. At least not since 2007, and I doubt it's, yeah, I mean, maybe we can go back like 30, 40, 50 years, whatever. Let's say generationally high value of ounces in the ground. Yet, gold in the ground has been getting cheaper the last 4 years, on average. Not all, not all. My point is that most people's salaries have gone up. Inflation has gone up. But there's, in a sense, deflation in real assets like precious metals in the ground. I mean, I would say copper as well. Thing with copper, obviously, that's like it's not at new all-time highs. The same with nickel, yada yada. So even though you can buy more nickel and copper in the ground, the value of that copper and nickel at face value, if you use just spot prices, hasn't really gone up that much. Gold has, and the margins have. So what has gone up in value has gone down in price. So in a sense, I mean, when you think about it theoretically, um, if if your portfolio has gone down in price, inflation is up, your salary is up. If you keep buying, if the value is going up, your portfolio is going down in price but up in value, and you keep buying at reduced prices, getting more value per dollar invested. I mean, you're basically creating wealth. You're using the deflating price in something that's going up in value. So even though your net worth at the time is not necessarily going up, but the your net worth from an intrinsic value perspective is actually going. You're getting wealthier. You own even more. You can own even more gold ounces. I mean, I know it's esoteric in a sense, but it's like if we use the whatever strict definition of there is something called, or we, we pretend, if nothing else, that there is something that is intrinsic value, and if value has gone up and price has gone down, basically you're getting a better and better bargain. You're buying more. I mean, you might have started out buying $2 for $1. Now it might be you buying $4 of value for $1 invested. So it's like in a sense, even though your portfolio might have gone down, it's like I would say your portfolio is probably worth more than it's been in 4 years. Um, Even if, yeah, well, I'm not gonna say regardless what the price is, but it's like, and it assumes some stock picking, etc., etc. So whereas a lot of people, the longer the bear runs, the more people doubt that a rally can even happen. I'm just, relentlessly buying. I am buying as much as I can every day. I don't have dry powder, which is a lot. I'm almost pissed off because I know this is not gonna last forever. Every time I have bought very cheap, as soon as those prices are gone, I wish I could go back in time. I know this is a finite fire sale, and it's the biggest fire sale this sector probably has ever seen in the last 40 years at least. Again, 2015 has nothing on 2024, 2025. When I bought, quote, cheap, or more aptly put, low in 2015, stuff wasn't really that cheap because there was almost no asset that was worth anything. Silver hit a low of, I don't know, $12, $13. Gold hit a low of 1,050. And most miners were losing money. So what's a money losing asset? Let's say I have a gold mine that would be losing money at that gold price. What's that worth? At that point in time, in a vacuum, it's worth less. It's absolutely worthless. If I pay $1 for that asset, I'm overpaying. Then you actually have to know that's like, this sector is going to turn around. This asset is going to be worth something someday. That's why I'm buying low. Well, today, it's almost a complete opposite in a sense. The stuff I'm buying has never had higher value, and I'm still paying pretty much bear market prices. Stuff out there is trading for, 10% of the MPVs. I mean, if you're using spot at least, 20%. So I get, whatever, 70 to 80% discount. That's cheap. That's not just low priced. That's cheap. Again, if I buy something that's worth $0 and I pay $1, I'm overpaying by 100%. This is cheap. In 2015, it was low. Now it's cheap and low. I mean, it's absolutely ridiculous. If you can't buy, and I'm not saying that everybody should be, have as much as I do in the mining sector. But it's like, if you ever thought about owning, or if you ever liked this sector, or at least know this sector, and it's like, oh, it would be fun to own miners. If you can't buy in this environment, there's no way in hell you would ever buy a 2015. So it's like, this is the most obvious buy environment I have ever seen. I started in 2015, but you can listen to the Ross Beatties and Frank Gustras and Pierre Lassonde. They've never seen anything like it. So let's say in the last 40 years, this is the most obvious buy environment there's ever been in the, especially, let's say, the gold junior sector. If you can't buy that, you might as well give up, because you will never ever buy a low. That's like, I mean, imagine somebody comes up to you, it's like, hey, you can buy this BMW for, it's worth whatever, 100,000. You can buy it for 10,000. You're like, no, I'm good. I think I can go lower or whatever, because it's gone down from 100,000. So the trend is obviously down. And you're like, no, I'm good. I'm scared it might go lower. But it's like, hey, the value is $100,000. That's what it costs to make. If you can't buy that, or you're gonna buy, now it's maybe actually a bad example, but let's say BMW cost goes down to 50,000 and it's selling for 25,000. So still 100% steal, 50% discount. You're obviously not gonna buy that if you can't buy a $100,000 car for 10,000. So I'm just saying, it's like, it's like, I don't need people to agree with me. I'm just saying what I'm doing, how I'm thinking. And to me, it's like, there's a lot of stuff that's like absolutely crystal clear. And that's why I don't see how I am expected to lose money over the long term, because there is situations like this that are possible. And it's been possible for like especially last year, when margins hit record, like 2 years. I thought miners were starting to get cheap like 3 years ago. Didn't stop them from getting cheaper. Just meant that I could buy even cheaper, let's say on average, for another 3 years forward, cheaper and cheaper. this is a true story. It's like I literally had a list. I didn't only invest in like silver producers or developers, but I had a list. I looked at whatever, like Endeavor Mining, First Majestic, Silver Standard, yada yada. I looked what their peak prices were, share price, not valuation, because some of them probably took in money. Just at the share price, their peak share price in like 2011. And then I looked what the price is now, and then I have, maybe Google Sheets, or maybe I had an Excel sheet, whatever. And I just, put in the, either automatically put in by Google, or I put it in manually in my Excel sheets, like the current price. And I remember, it's like I was buying stuff that I think Endeavor was, well, some stuff was down like 93%. I think some were down 97%. I basically tried to buy the ones that were down absolutely the most, because the way I saw it, they were simply the ones that were the most oversold. And a lot of them, when it turned around, most of them went up like 300 to 800%. I didn't own them all the way up. I owned some for quite some time. I think I made like, I don't know, 500% in Bear Creek Mining. Of course I didn't bottom ticket any one of them, but I bought them very low, and that's why my portfolio, when it actually bottomed, first it went down 50%, then it bottomed. It went up 500% in 8 months, and that's not just one stock. That was the entire portfolio went up 500% after the bottom was in, which I had no idea that it was in at the time, of course. So I mean, you don't need precision at all. You only need to get somewhat close to a bottom. And I have no idea. I think we've seen the bottom in the juniors, and I'm glad. I'm gonna be, if that was the bottom, I'm gonna be glad in hindsight. It's like 8 months ago I was buying, and I still think it's cheap, so I'm buying right now all the time as well. This is, I mean, not to bash too much on crypto, whatever, but again, but I think it's maybe a good example. It's like, this is a post from some Giovanni in Casa. Bitcoin personal trainer leading you to financial freedom. The more you know, the less you diversify. BC. Okay, so a lot of like cliche in a sense. Like, I mean, the diversification is for people who don't know what they're doing, for example. I mean, in a sense, that's true. It, of course, in my opinion, depends on the risk profile. Even if you know a pre-discovery story is insanely cheap, there's like, it's pricing in a 1% chance, and it's undoubtedly at least 10% chance of making a significant discovery, for example, that's still incredibly risky. So even if you're 100% sure it's 900% undervalued, that's obviously not a situation where you go all in. Because from a compounding perspective, that's a risk you can't simply take. 90% chance of, let's say, getting cut in half. That's a huge problem, because then we're also talking a story that, let's say, they missed and don't have anything. It's not like you have a cyclical sector that during a flash crash goes down 50%, and you have 30 holdings. There's like, obviously that portfolio is gonna, if it was cheap to begin with, it's obviously gonna come back. Anyway, so I bet my life savings MicroStrategy will become the most valuable company in the world by 2030. Not because it holds the other, because it's MicroStrategy found the secret formula for making money. I mean, I mean, there's a lot of things with this post, obviously. I bet my life savings. I don't think this guy has any idea what he's doing. I think he's basically, in a sense, trying to farm content. Basically, I mean, increase his follower count, etc. And you know that 95% of people are attracted to Bitcoin, because 95% of people have no idea what they're doing. And nobody really needs to know what they're doing, because in Bitcoin the experts are guessing as much as the retail folks. I mean, it's or most of crypto. It's like Dogecoin or Fartcoin or whatever. It's like they're literally trading sardines. And sure, you can be better at trading than maybe anyone else, but it's like the experts and the whatever, the novices, the retail, they're all saying that Bitcoin is going to go up forever. And I mean, that's along the lines of what he's saying. It's like, because it's my sailor found the secret formula for making money. I mean, Jesus Christ. Yeah, I mean, I've talked about this before. I mean, it's basically a pyramid scheme. That's not a secret. Well, everybody has a secret formula if it's a pyramid scheme. You know, I mean, it's just crazy. And it's like, never trust a CEO who hasn't been broke. My sailor lost $6 billion in a day back in 2000 due to an accounting error. I mean, I've shown you that article. I don't know the exact details. Obviously, I don't think this is correct. He lost $6 billion because of an accounting error. Yeah. I mean, that sounds very plausible. It's just some accountants like, oh, I put a zero in the wrong place, and it's like, yeah, that creates a $6 billion swing. It's like, yep, that's easy to believe. Anyway, so I bet my life savings. I mean, just the fact that he would bet his life savings in Bitcoin is like absolute lunacy from a risk reward perspective. So basically, one could say he has absolutely no idea about risk management or compounding or anything like that. Personally, I think Bitcoin is not going to be a thing in, I don't know, within 10 years or whatever might be. I might be wrong, of course, that's my belief. I still think it's absolutely insane. And basically, he's betting on it becoming the most valuable company in the world by 2030. I don't exactly remember how. I don't know exactly the market cap of MicroStrategy right now, but I think we can agree that it's a kind of a stretch, assuming that MicroStrategy is going to be the most valuable company in the world by 2030 because, quote, sailor found the secret formula for making money. I mean, can you believe this shit? So if he's serious about this, I mean, that is just absolutely crazy. But it just goes to show, I was going to say, it's like he bet his life savings. Well, we can expect this guy to blow up sooner or later, and Sailor as well. And then he's going to be betting his life savings in something else. But anyway, so I tweeted this, and this is like the perma whiner. It's like sometimes I don't know if he's trolling or not, because he doesn't seem to get anything that I'm saying. And he, I don't know, kind of refuses to debate because he just points out stuff that's obvious. It's like, the miners have been, the average miner has been shit the last 4 years or 5 years or whatever. It's like, oh, right, okay, that's good to know. How useful is that information? Where he like here, it's like, they're kicking our ass. And I tell him, it's like, surprised you haven't sold miners, which you hate, and joined the winners in Bitcoin, because he keeps saying the same thing. If you hate miners so much, if you keep pointing out how sucky they have, it's like, that's why I'm buying them. That's why I'm at, let's say, peak bullishness. This is why I think today blows 2015 away. Am I complaining about the fact that, juniors are so cheap that I can't help but make money from these levels in the future? Of course not. Because I have a sense of price to value. I think I know what I'm doing. And so it's like, again, I don't know. I think he's just venting, basically. Again, he wants other people to agree with him so he can feel good about selling miners and then joining Bitcoin. Because he follows me, and I'm constantly saying it's like, providing copiums. Like, you never sell low. You don't sell a cyclical sector that's cheapest it's been in 40, 50 years or whatever. And he wants to sell because he can't take it anymore. So that upsets him. It's like, because let's say my copium is kind of keeping him in there, but he just wants to let go, like sell everything and don't worry about missing anything, so he can go and join the crypto bros. So I think that's like, it's triggering him in a sense, because his emotions tell him that he should sell, because he's constantly complaining about the miners will never go up. Maybe they will have gone up in 2010 or 2010, 2040, whatever. So he desperately wants to sell low so he can buy something that's at an all-time high, let's say. And it's obviously incredibly speculative in this riddle with, kind of people like this, that people are betting their life savings in something that a lot of people would say is maybe the biggest bubble the world has ever seen. But that's kind of case in point. I mean, that goes with the territory. I mean, every bubble, if it was obvious to everyone that it was a bubble, it wouldn't be a bubble. And everybody in the tulip mania and the whatever, the what's that other company, like the South Sea bubble, every long looked 100% right. The right a long has ever looked up until the top. After that, it didn't take too long for every long to look as wrong as they've ever been. And then, I mean, tulips collapsed 99%. I guess the South Sea bubble, I guess it, whatever, went bankrupt maybe, or down 99. So in a bubble, everybody and their mother looks right until everybody and their mother looks wrong. So I don't see Bitcoin at 1.5 trillion or whatever it is as proof of anything really, because Dogecoin was at 70-80 billion, and that's literally created as a joke. Fartcoin is at 1 billion. So if something called Fartcoin and Dogecoin can reach those valuations, despite the fact that everybody knows they were created as a joke and it's a trading sardine, is it that hard to believe that something like Bitcoin, that had first mover advantage and where the narrative is more like infinite wealth creation, can have a even higher market cap than that? No, I don't think it's a stretch at all. I don't think it proves anything in this day and age that Bitcoin is at whatever it is, 1.5 billion or Jesus, maybe 1.8 trillion. Anyway, I mean, that's basically it. So it's like I'm tempted to just maybe mute or block this guy, because it's just, he says the same things over and over, and I try to, explain, and it's like, do rhetorical questions. But I mean, he and also he doesn't really, I guess, want to take responsibility. It's like he said he bought, my first buy was sub $400. Imagine one of these miners pulling out 250x. Okay, so he started buying Bitcoin at $400. That was his first buy. Then he should have made a lot of money, right? And then he goes back, kind of deflects and just says that I've never been in a sector with such garbage returns, so I assume he didn't make that much money. Maybe he sold it at $600. You never know. And then he's like, Gold Explorer after I bought, so I think I did right. Amazing, one can seem right, but be so wrong. I like my money to work for me. Which, I mean, this guy has, I don't think, any idea what he actually owns. I don't think he has, I think he owns 3 stocks, 3 unions. I don't think he really understands what he owns, because he doesn't seem enthusiastic at all about being able to, let's say, buy the things he already has at these prices. Because if he was thinking, it's like, oh, I think my 3 holdings are worth 4x of what they're trading at and could go up 10x, would he be here bitching every day about the fact that he could buy them so cheap? No, of course not. And then I asked, like, okay, when did you actually buy? I'll have to look back, but it was after COVID when everything crashed. I'm thinking first or second Q 2020. Gold was around 1650. 2020. Okay, 1650. I guess maybe here. For sure, miners. I'm just gonna look at SILJ. I think that's kind of somewhat close to. So let's say he bought it. When was this here? So maybe there. So he had a good start, allegedly, and he's probably down somewhat now. But still, I mean, if he bought at 1650, did he say after the COVID crash? After COVID, okay. I'm assuming it's after the COVID crash. So when it started to, whatever, 1650. Let's say he bought here or something, and then that happened. I mean, is that really buying, let's say, low? I mean, miners had probably gone up here. He wasn't buying down here. He wasn't buying down there or anything. So when they when the miners had, I guess you can say that. Okay, this is not gonna. I don't know if this shows up correctly. I think this is using the gold chart. But anyway, so I'm assuming he, let's say, saw this, and there must have been like, or I mean, this ramp here, this rally here, is basically the strongest rally since this. So my point I'm trying to make is, does it sound like he's actually, thinking about price to value? No, I think he probably saw headlines, whatever, that the mining sector was absolutely ripping, because it did absolutely rip in a very short time frame from the crash. And then let's say he buys in here. Like I say, when the bull is obvious or everybody's exciting, most of the gains are already gone. From here to here, it's probably, for juniors, I think that probably would be a 300% return, maybe. Maybe it was like 100% left from here. So we already missed, let's say, 75% of the rally. And then he buys in. So it's like he bought high. He bought when the stocks were doing very well. When they had the most epic rally since this basically vertical move back in 2015. See, I was buying going into this. That's why I was down like 50% first. I was buying the way down. I wasn't starting to buy when it had gone up 200-300%. So you had whatever, this left, and then sooner or later back. So that's, I guess, what has happened, that he started buying in here equivalently, and then it's down, then he's down, and then he's like, oh, this sector sucks. But of course that just tells us in a sense that he still has no concept of price to value. He has no concept of what cheap is. He just wants to buy things that he thinks is going to go up sooner or later, and preferably he's probably going to be one of those where, when this sector, let's say the average junior is up 100-200%, or at least a vertical move, because when it kind of steps higher, that doesn't really get people excited. That's why, I think this was probably the bottom in the sector, if I had to guess. A lot of juniors are up quite a bit. He's not excited about this, if you know what I mean. Because he wants it. He doesn't want some choppy. And now a lot of juniors had a correction after going up, I don't know, 200% or something. That's not good enough. It needs to go up like 200-300% in a straight line. That's when people like him, and I think I pinpointed his type of, let's say, that investor type. That's when they get in. So he's not been averaging down. He wouldn't be, if he can't buy this, if he just complains, he would never have bought here. Never bought here. He didn't buy here. No, he bought after the vertical move had gone on, let's say, when the first 200-300% was behind. And that's why he, frothing at the mouth kinda to join the winners in Bitcoin, because that has performed. But if you're a momentum trader and you buy if the most appetizing buy is the one that's been going up the most for the longest time, let's say, That's not really a good reason to buy, is it? I mean, if you're a value investor, you're not really looking at that because you're going to be at peak bullishness, at peak price to value gaps. Or at least if you're a contrarian, you're going to buy when everyone hates the sector. But he's one of those that hates the sector. So, but I think he refuses to acknowledge that he doesn't really understand what he's doing. So he's, nobody wants to feel like they're doing something that's wrong. Nobody wants to feel like it's whatever they are responsible for poor returns, let's say. I mean, that's typically, I think, why you see as soon as a share price goes down, or let's say a story fails, I mean, I don't know how many people just immediately say, and I've gone through this before, it's like, it's a scam, it was scammed, I was scammed, the management teams are scammers, for example. That's the go-to excuse. Do a lot of management teams make mistake? Yes. Do they maybe have poor timing? I mean, there's this. I mean, one typical thing is that as soon as a story gets cheap, if let's say insiders have a lot in the stories, like they don't want to dilute at whatever level they think is cheap. So they might they bet that the sentiment will turn around. I've heard that from a lot of management teams. And then it didn't. It just got worse and worse. And now you're in an increasingly bad sentiment, or I mean, the sentiment is decreasing. The discount on your assets is increasing, and you have even less money. So when you finally have to raise money, you might do it at 40% lower than where you started off not wanting to dilute. Then you have this kind of, in a sense, death spiral. Price-wise. That stuff happens a lot because it's extremely hard to time things. And of course, like always, if a stock goes up and a company raises money, it's like Goliath. Oh, why are they raising so much money? I mean, so they could drill a heck ton, because it's people are going to be even more pissed. Let's say they don't raise money. Oh, okay, so there's less excitement, for example, and the stock price, let's say, doesn't go out of orbit, and then maybe the sentiment gets even worse, and maybe there's some like lackluster results or something. All of a sudden the stock is down 60%, and they don't really have any money, and then people are going to be bitching about that. Everybody bitch depending on what has happened. It's like how many in reality, it's like it's probably extremely hard to run a junior. Because you don't know what the sentiment is going to be, you don't know what the access to capital is necessarily going to be unless you provide the capital. Except you're a Lundin, for example, because you can fund the juniors yourself. You can, let's say, walk the price wherever you want it, in a sense, and you have the network effect and yada yada. It makes your life a lot easier. Most juniors don't have that. But yeah, so I'm just asking him because, again, he's the number one bitcher that follows me. And it's like, I've asked him, it's like, why do you even follow me? It's like, I don't agree, I almost don't agree with anything he says, except when he's stating obvious stuff. And I just asked him, and you had terrible return since, I think you have to work on your stock picking in that case. I mean, okay, now he might have bought, I thought he, it sounded first like he bought the exact low or whatever, but I do think he bought after the sector had already ripped higher. Not terrible, not great either. Let's be honest, the absolute majority of again, it's like, I said, I think you have to work on your stock picking. Obviously, he has to do that. Obviously. Because he doesn't seem to, he's not excited about juniors at all. So he's not seeing this like price to value discrepancy. He doesn't sound excited about the fact that he can buy whatever he thinks, whatever holdings he has. The fact that he can buy them and they've probably gotten even cheaper since he started doesn't appeal to him at all. Okay, so you have no conviction in what you own. You don't understand the story. You don't really understand why you should make money because you started off buying just because some stocks went up a lot and you thought they were going to go up a lot more. Okay, that explains. I mean, if you reverse engineer basically his stance to all of this. That explains it, and it's how most people get into any sector. But then he, deflects. It's like, I think you have to work. It's like, okay, again, I'm saying you probably have to do work, so I'm implying that's like, hey, you're also responsible for every single buy you do, every single sell you do. I think you have to work in your stock pick in that case. But he doesn't. I mean, he doesn't. I guess want to agree with that at all. It's like he doesn't want to feel like he has to do anything more. Cause, okay, Jesus, am I to am I to blame? And now it's of course a somewhat extreme example because, like, let's face it, anybody, especially if you're a whatever novice or can't spend as many hours as me just obsessing about cases and the market every day. Let's say you have a full-time job that's other than just thinking about juniors. If you started buying here, there is no real mystery as to why you might be down 50%. That it's very easy to lose money in a bear market, and it's almost impossible to lose money or not to make money in a bull market. That's just how it is. I didn't create the rules, that's how it is. Only a few juniors, let's say, will buck the trend in any given bear market. And of course, the worse the bear, the higher the discount to tangible value, whatever, the harder it is to actually outpace that increasing discount with you have to create even more value, let's say, and get appreciated by the market. So there's no mystery. You're not the worst investor in the world because you're down 50, 60, 70%. That's not what kills people. Most people start buying any sector or start investing at a high. That's just nature of the beast. That's what gets people excited. You hear people making money, you buy into it. So you buy in here, and now you're in for this. So you were one of the last people in, and nobody knew it was going to top here, but it topped, okay. Went down. Nobody could have predicted it. I thought junior started to get cheap here. And the same, I mean, back here. It's like I thought it was really cheap here, it just got cheaper. I just bought more and more, it swung around. Same here. Start to buy maybe, actually, I have pretty decent time. I think I started buying like here or whatever. But this was still a minus 50% decline, if I remember correctly, from here to here. But I just kept buying more. Okay, so go from a loss to a big return, loss, big return, yada yada. Get better at stock picking all along the way. Increase my buying the lower it gets. Yes, then it's kind of hard to lose money over the long term. But if you started out buying here, then you haven't even seen your full first cycle yet. So it's again, there's no big secret why you might be down. That's not the thing that kills people. It's the thing that kills people is that everybody repeats the same mistakes. Because he obviously bought when this sector was hot. Now he's down. Now he wants a reason to sell and not do any more work or trying to figure out. I mean, I don't know how long it took to actually figure out what, it's like I don't know much about oil. I don't know much about gas, for example. I mean, it's taken me years just to kind of figure out how you invest in gold mining, silver mining, etc., etc. It's a long journey, and if you don't put in the time and effort, that's a Herculean task. I mean, just consider the fact that I've said this before. It's like everybody knows how to get in shape. You go to the gym maybe I don't know 3 to 5 times a week. You eat very healthy, yada yada yada. Everybody knows how to get in shape. Everybody knows how to get fit. That's way, way, way more simple than investing profitably over the long term. Coming up with a coherent, rational strategy of investing and sticking to it. Fitness, it's literally like eat less calories than you um, or burn more calories than you take in and work out. Yet, what is it, like 5% of people are in good shape or something like that. Um, so why aren't everybody in shape? Because it takes a lot of work and discipline. So I don't think, for example, I don't think this guy really, when you kind of suggest it's like, hey, I think you need to. He obviously has a lot of stuff to work on, but he doesn't. He doesn't want to feel, and I get that. You don't want to feel like it's your fault that you made mistakes. I mean, that's most of us don't want to feel like we're to blame for anything. I mean, that's especially today when the victim mentality and this woke crap basically. It's like it's popular to be a victim in a sense, and yeah. So going back to this, like, not terrible. Let's be honest. The absolute majority of miners have been shit. Otherwise, you wouldn't tweet nonstop. How everyone needs to be patient, not worry about the shit returns we've seen. Have I said anything else? Have I said that the sector has done great? Obviously not. That's why it's cheap. It's done terrible. Uh, and I don't. Again, I don't know what he's trying to like. Otherwise, you wouldn't tweet nonstop. How everyone needs to be patient. Yes. Again, if something is cheap, if it started being cheap here, you obviously need patience because every bear market is followed by a bull market. It's like this is pretty common sense stuff in a cyclical sector. And it's like I'm a stock picker. I say that all the time. It's like I wouldn't touch the average junior. It's all about stock picking, but at the same time, I don't want to just say, oh, you can only buy my picks, only my holdings. I don't want to be I don't want to be just chronically, let's say, pumping my own names. I mean, there's people, you don't need to own the same stocks I do. I mean, I don't know. I bet there's a ton of juniors out there are also cheap. I don't even know if I own the cheapest junior there are. I think I own some of the cheapest out there. But I bet there's gonna be. I bet I could make maybe 3, 4 at least different portfolios. I at least, let's say, 2 to 3 portfolios with 20 unique names in each, and I think they would all do well over the next 3 to 5 years, let's say. Like multi-bag returns. So it's not like you can only make money if you own exactly what I have. Because there's people out there who I think are good investors and they might not own a single case I own. And they might end up making a lot of money. They might end up making more than me. I still think I'm going to make a lot of money, but you get my point. So it's like I say a bunch of generalist stuff that pertains to junior investing, but I don't want to shove my picks like, oh, you have to buy. That's why it's like somebody asked me today, what are your favorite picks? I'm kind of uncomfortable. It's like you probably know what my favorite picks are, but I don't tell you to buy any of them. If you don't see the case, you're just gonna end up making mistakes. I might think that, oh, this case is the best thing that's since sliced bread. I know the case very well. I have conviction. Share price goes down 20-30%, and I might whatever double down immensely maybe because it's like I cannot believe my eyes. Yada yada. You buy the same stock. The same thing happens obviously if you own it. It's like let's say it goes down 30%, and you freak out because you have no idea why you're buying this. You don't know why it's gone down. And let's say there is no real reason why it's gone down. It's just as sentiment for 3 weeks just went terrible, somewhere along those lines. So nothing has really changed. But you have no one holding your hand, so you end up selling because you didn't have any conviction. Is that again? Is if somebody hands you a case. I mean, it's for example, I bought cases that were high convictions for other people. I didn't really follow the story that well, and I hate asking people for like asking people to hold my hand. Because it's like I think they did me a favor, let's say, of giving me a tip, and I do believe that they believed what they said. But I don't want to, every week message them. It's like, hey, is this case still intact? Do you still like it? Yada yada yada. I mean that's a preference of mine. I'm not saying I think I'm maybe too stubborn in that sense. I rarely actually ask, management teams. I rarely call up management teams. I know people who talk to, the management teams or their holdings every week. I don't do that. That's just not my style, for better or for worse. Uh, my point is that's like, just because I say buy cheap, keep buying cheap. The cheaper it gets, the more you should buy, obviously, because it's a cyclical sector and all that. And if you're a value investor, that's the only thing you look at: value versus price. If you bought something you thought was very cheap, price goes down, value does not. It just gets cheaper. I mean, you don't need to be a rocket scientist to figure out what that a value investor would simply consider it an even cheaper stock, an even bigger buy. And that could last, let's say, for 2 years. It just gets cheaper and cheaper and cheaper. There's no time limit, like, oh, this is cheap unless it's gone up, or this was a buy. I mean, that's the funny thing. It's like, only buy cheap, but only if it's has gone up within whatever 2 years, let's say. How would you know when it's exactly gonna go up? How could anyone foresee that, oh, there's going to be the biggest price to value discrepancy this sector has seen in 40 years in 2024, 2025? Did I bank on that? No. I mean, some of the billionaires, I mean, they were saying that how cheap this sector was in 2022, and I agree with them. Still, this sector went, 50% lower. Nobody can predict that, but it doesn't change the fact that if they were cheap then, and if they're even cheaper now, they went from a buy to a bigger buy, and in the meantime, you're going to have paper losses. Yeah. Anyways, like the absolute positive majority of units are sitting deep in the red. There's a reason you post 100 times a day to tell people not to worry. If they were all making bank, you'd not be tweeting this. Almost everyone is underwater, and I believe again. Why does he think I'm tweeting it? I don't know what he's like. What is he trying to say? Absolute vast majorities units are deep in the red. Yes, we have been at least in a 4-year bear market. There's a reason you post 100x a day to tell people not to worry if they were all making bank. I mean, that's the funny part. Like, basically, what if you take what he's saying here at face value, it's like he's complaining about the fact, in a sense, that I'm telling people, who's like, if something got cheaper, you should just buy more, buy more, buy more. If you flip it around, what he's saying is like, if they were all making bank. So, what am I supposed to do? What does he want to see from me? After, let's say, this sector is up 500-600%, it's gone up for whatever 1-2 years, the best rally we've seen in a long time. Is that when I'm supposed to tell people not to worry and buy? Would you need it? You should be probably selling instead. So I mean, again, it just highlights that he has no idea what he's doing. He has the concept of buying cheap. He's probably never bought low in his life. Well, if you believe him, he bought some Bitcoin at $400, which again had no, I mean, in a sense, no real value. I mean, even I was mining Bitcoin in like 2014. I didn't consider, oh, this might be whatever. No, I was just greedy. It's like, oh, I hear Bitcoin, you can make money mining Bitcoin. That's it. Just greedy. I wasn't a sophisticated investor. Anyways, like, because we're in I don't know, because we're in a deep long mining bear market, the worst ever, like ever. I mean, again, I don't know what he wants me to say. There's like, yes, If we're in the longest bear market, I mean, and you only find out after that has happened, right? I mean, if you're at if a bear market lasts for 6 years or whatever, uh, in year six it will be and the last previous bear market was 5 years, whatever. In 6 years it will be the longest bear market, and it will be the worst bear market. Knowing that, what are you supposed to do? Again, I think he's just looking for, uh, I don't know, somebody to like, yes, it's okay to actually sell. I mean, it's just absolutely insane. I mean, the only real thing we know at any point in time is like, okay, if this was the top, let's say this was 1 year into it, 2 years into it, 3 years into it, or 4 years, whatever. The only thing you know is like here, what do we know here? Well, it's lower than a year ago, and it's obviously been 2 years of decline. Okay, so now the only thing you know is you're 2 years into a bear market. You know that no bear market lasts forever, so you know you're closer to the next upturn. Regardless if the bear market would have been 20 years, in year two, there's 18 years left, whereas in year one, there's 19 years left. And from lower levels. So you're closer to the next bull and from a lower level. So again, the future expected compounding goes up. The longer the decline, the closer you are to the bottom. Obviously, I mean, if this was again 4 year bear market, this is 1 year and 3 years left to the bottom. 2 years, let's say, into it, 2 years left to the bottom, 3 years and 4 years. You know, this is if this isn't the bottom, this is closer to the bottom than this is. That's what you just know, because you know that it's gonna end and it's taking a longer time, and the longer it takes, the lower it goes, the higher. I mean, if this is the cheaper than it was here, it's just gonna go up even more when it actually turns around. So it makes no sense. I mean, when do you have the best possible future returns? Obviously at the worst spot. I mean, let's look at major indices. Let's look at where's Japan? Nikkei. Yeah, let's take Nikkei. So here's, I mean, this is in a sense a nightmare chart. This was a top put in 1989. It reached the same level in 2024. So 35 years, let's say, give or take. 35 years to reach the same high as it hit back here after a monumental bull market. What happened after it topped? What happened after the biggest bubble? I mean, this was a famous bubble. I think I actually, well, I wasn't around really back here. I think that was hotter even later. I bought some Japan fund on my 12th birthday, I think. It was when I wanted to collect the money and sell it. I think it was down 50% like 12 years later. Which is kind of crazy. I mean, every other index basically was up multiples over that kind of a period. That was the only fund where it's like, no, you're down 50%, which just goes to show that even I had heard about Japan whenever that was. I might have bought around whatever here, let's say. Maybe it was kind of hot still. I don't know. Or maybe I just maybe I saw news about it crashing and oh, Japan, I've heard about that. Anyway, my point is, nobody had any idea exactly how after such let's say the most epic bull market, and I mean goes back to his point that this is like the worst bear market ever. This is probably one of the worst bear markets ever in a stock index. And now it's had a monumental rally. This was an absolute monumental rally, and then you had the worst bear market that you'd see in any major index. So it's like extreme overvaluation led to one of the most horrific bear markets ever. And again, when you're here, the only thing you kind of know, and I mean, especially if you look at hindsight, you didn't know when it was going to bottom, but this was closer to the bottom than this. This was closer to the bottom than this. This was closer to the bottom than this, and here you have lower and lower prices. So again, what does that happen, or what does that mean? Well, if this is the ensuing rally, this was the peak. This turned out to be the bottom. Nobody knew it, of course. I mean, I bet there was some, margin, stop losses and whatever when it broke this here, like here, for example. Obviously, try to, bounce here, boom, down. Okay, everybody, sky is falling, and then it had a pretty decent rally, actually. My point is that, okay, from this bottom, which was slightly higher, you had 389. At the very bottom, you would have 457%. And this is a shorter time frame than this. So what happens when we go into an extremely lengthy bear market? The only thing you know is that if this isn't the bottom, when you're here, you know you're closer to the bottom and it's at a lower price. So you're going to make even more from buying here in a shorter time period than you're gonna do from buying here, right? So every single buy, regardless if you don't even know when the bottom is in, just know the longer this bear market lasts, the closer to the bottom you get, and the lower the price, the more you're gonna make. Because we're in a deep long mining bear market, the worst ever, right? Again, I don't know what his point is, but since you know it's a cyclical sector, if we're at extreme undervaluation and we're into a long bear market, where does he think he is if we use this as an example? Are we here? Should one be selling? Are we here? Are we here? Are we here? Was the bottom in, let's say, a year ago, 8 months ago, 9 months ago? Are we here? Have we already started a bull market? I think so. I think we have seen the lows already in the average junior, but there are some who still are like at 52-week lows, whatever. So it's not a broad-scaled euphoric bull market, but a lot of them are at least higher than they were within the last 12 months, for example. So again, it's like I just asked him, still waiting for any kind of pragmatic useful point. In other news, the sky is blue. He's just pointing out anything that anybody can see. He's stating facts, and that's the funny part. When I was like, yes, but what's the point? He's just, I'm just stating facts. What the fuck is the value of that? What is the conclusion? Because that's what I like to ask people. It's like, people say, Bitcoin and crypto has been kicking our asses, miners have sucked, and they whine about it. Like, they're telling me that, and then it's like, what do you want? Well, first of all, I asked them, it's like, so what do you make of that? And rarely they actually respond. I mean, like this. It's like still waiting for, it's like, what are you doing with this information that everything is red, Bitcoin has kicked our asses? Still waiting for any kind of pragmatic, useful points. Like, again, why is this information is only worth anything if you can do anything with it? The fact that we are, the sector is depressed and has been in a long bear market and has reached extreme lows, the information I take from that is that we are in fact in a place you're supposed to buy hand over fist. That's my takeaway. So I'm just asking what his takeaway is. But again, then he deflects again. It's like, well, good man, I'm sure when gold is 5,000 and silver is, it will be up solidly any day now. So he just went back to bitching. Because again, he doesn't know what he's doing. He looks for excuses to sell minor juniors because he's not accustomed to buying low or cheap. He's used to buying whatever has gone up. He wants to buy whatever has gone up, whatever is quote working. So that's kind of what he gets triggered when I'm like, you shouldn't sell here. You shouldn't sell lows. You shouldn't sell lows. The dumbest thing you can do is sell lows. If something gets even cheaper, it becomes a worse sell. That triggers him because the worse it gets, the cheaper it gets, the more he wants to sell. So then he just points out like, this sector has been shit. Again, looking for kind of permission in a sense to like, yeah. So I mean, again, what does he want? What does he want me to sell? Yes, you're right. Or anybody is like pointing out how shitty Nikkei was. It was in a bear from Jesus. Yeah, let's say whatever, 20 years. So it's like, what do you want somebody to say here? Yes, it has been absolutely a disaster, shittiest performance there is. Therefore, should you sell? When it is absolutely the worst it's ever been, should you be selling or buying? When it's the best it's ever been, should you be buying or selling? He wants an excuse to sell now. That's what he's looking for. And he wants me to kind of give it to him. Even though he doesn't go out and say that. But it just triggers him because he's seeing now Bitcoin is up at 100,000 again, etc. He desperately sees what he's missed out on, quote, wants to buy that. He sees what he has, let's say, lost money in, he desperately wants to sell that. And he cannot fathom why I'm bullish, why I'm, per his words, do 100 tweets telling people not to worry, it's gonna turn around, you shouldn't sell cheap. That pisses him off because he doesn't understand what I'm seeing. I think this is an extremely good example how I don't think he's unique. This is literally how 95% of people behave. Bitcoin has gone up a lot. Therefore, they want to buy it. Juniors have gone down a lot. Therefore, they want to sell that. They want to buy this up here and sell this here. But again, he doesn't want to, in a sense, take responsibility. He does not want to do the work. He just wants to get permission to sell right now. Yeah. Anyway, I think that guy tilts me to no end because I'm pretty sure. He has followed me for at least months. He still doesn't appear to agree or see anything that I see. Doesn't look at things anywhere close to how I look at them. I doubt he has watched a single one of my videos. So, which kind of tells me that, again, he is not prepared to do any work at all. He just wants to buy whatever feels good and make money. When that doesn't happen, he gets very upset because he, again, doesn't know if he's supposed to buy or sell. He feels like selling, so he wants some people to agree with him that he should sell, so he doesn't feel bad for selling at a loss. And he definitely doesn't want to feel like he might be missing out since he feels like selling. He doesn't want to feel like, oh, I'm this close to selling, And then you have someone who's like, you shouldn't be selling here, and he's like, Jesus, I want to get out of here. I have no idea what I'm doing. I'm taking heavy paper losses here. This doesn't feel good at all. It doesn't look good at all. I'm probably making a mistake. It's like, obviously I'm making a mistake since I'm down. I just want to desperately sell and buy Bitcoin because everybody's making money there. And this guy's saying that that would be a mistake. So it's like, oh, what do I do if I sell now? Maybe he's right, and then it's like, Jesus, then I'm gonna feel even worse, because what's worse than, whatever, having bought high is, selling low for good reason. It's like, yes, as I said before, everybody starts off kinda um, buying here, and most people's adventure ends when they're here, because then they sell and then they buy the next thing, like that guy who's like, I'm putting my life savings in whatever. I don't think he has any, I mean, I think he's an absolute lunatic. So I expect him to, sooner or later, he's gonna blow himself up, and then he's gonna find another thing to put all his life savings in. I mean, uh, I'm super bullish real stuff, but if you see me say, it's like, hey, own a bit of a bunch of metals, spread the risk across jurisdictions. I want to make damn sure, or try to capture this market when it turns. I want to be in the best or the cheapest juniors I can find. But you have to be open to the idea that uh, even the best, in a sense, jurisdictions, shit can happen there. I mean, Canada is, in a sense, a basket case, I think, from, I mean, their finances and all that. They have no gold and yada, yada, yada. They have a big resource sector. That's also something that potentially could get taxed higher and stuff like that. I mean, I don't think they will nationalize. But when shit hits the fan, there might be some shenanigans going around in some jurisdictions. Maybe there's war in some jurisdictions. It's like, you know what I mean. So it's like, you never know. I want to make sure, because I think real assets are in a bull market. Gold is obviously in a bull market. Silver looks to be, I mean, very much in a bull market. Margins for gold miners are in a bull market, and yet the prices have pretty much gone down for 4 years. So it's like the most obvious bias there have been, and then people are like always, oh, I mean, I've seen people say the market knows something. Somebody said, well, I think the market knows that all these mines produce are gonna get nationalized. My answer to that is like, well, that would be kind of surprising if the retail driven market knows something, but the institutional money, for example, who buy the large gold miners, they have no problems with it, really, because they're not dirt cheap. The juniors are we supposed to believe that, oh, it's Joe Schmo that has an inside track to whatever the background meetings at Davos? You know what I mean? I mean, it doesn't make sense. So, is the world gonna nationalize every mine? Yeah, that's probably gonna end up well. I mean, if anything, we're actually right now. I mean, we're kind of going the opposite way. I mean, Trump just got into power. I mean, they want to reduce the government. So, and Sweden, for example, got a right wing government in the last election. That's not going towards nationalization, at least. That's going away from nationalization. That's going away from socialism. Then, yes, shit might hit the fan, and who knows what could happen in that point in time. But doesn't change the fact that, I mean, the West is indebted. Germany is having problems. France is having problems. The US has a shit ton of problems. Obviously, that's why Trump got elected. Because, I mean, Jesus, the deficits are just staggering. I think Canada's gone the wrong way. That's why Trudeau is resigning. So, I mean, all of these countries, they have a huge problem, but the retail doesn't care about that. The central banks are buying gold hand over fist. But retail is still stuck in crypto. I mean, at a point like this, where is he? Where's that guy that? Oh, yeah, well, here. Uh, the sayings like it's about return of capital and not return on capital. I mean, if there was any point in time that I've been alive and let's say watched markets, this would be the time that I wouldn't be. I mean, I do take, in a sense, I should have more physical gold and silver than I actually have. I have a vast majority of my money in mining companies, junior mining companies, which could be seen as like greedy, but they are the cheapest things I can find. So, and they're still, they have real assets. So I don't think, I mean, if whatever the aliens attack or a meteor, it's like you're not going to be safe in Apple anyway. You know what I mean? And Apple won't be around if there are no mines around. And given the nature of the problems in the West with the fiat yada yada, precious metals make total sense. That's why I guess gold is at an all-time high. But the retail is not really caring about that. It's still a speculative mania. The stock, U.S. stock indices, I think the U.S. markets have outperformed the world more than any time in history or something like that. I mean, in a sense, the U.S. stock market has dislocated itself a lot, and you still have Fortcoin at 1 billion, Dogecoin probably 40, 50 billion at least, and you still have people doing this in Bitcoin. So obviously there's not a lot of fear going around, if you know what I mean. Still, central banks seem to be fearful of something, obviously, and they want alternatives. Trump is talking about taking or acquiring Greenland, for example. So I mean, there's a lot of shit that's happening. And well, I have a lot of stuff I want to go through as well, but I don't think I. Well, we can go through this at least. Maybe I should save that for. Maybe I'll save that for next video. But I mean, have a taste of this. Rio Tinto Glencore discuss potential combination. Yeah. So they would surpass BHP. I mean, imagine like Glencore, who are like the Sith Lords in a sense, teaming up with Rio Tinto, creating the world's largest mining company. I mean, that is some Dr. Evil kind of stuff. Imagine how powerful, in a sense, that company would be. While it's becoming obvious, China is using commodities as a weapon. The US is freaking out. The West is freaking out. Europe is freaking out about strategic critical minerals, yada yada. You can't have wars. You can't have whatever, spend $500 billion on data centers without copper, yada. So it's like everything again. The base of the S&P 500, the Nasdaq, the crypto bubble, the AI mania, anything is based on commodities. And at this point in time, Rio Tinto and Glencore happen to discuss potential combination. I mean, Glencore is famous for doing, being kind of the Sith Lord. So it's like, imagine that the kind of power, in a sense, that company would get. So I think this totally rhymes with how strategic commodities are becoming. Because let's say, if you think commodities are going to be an even more critical point, in a sense, bottleneck, like going up in how strategic they are. If you're the biggest swinging dick in that increasingly strategic space, or whatever you would call it, that makes a lot of sense if you want to have a lot of power. I mean, it's like you can read about World War II. I mean, a lot of the, what was behind World War II was like a hunt for controlling commodities. I mean, that's typically what sparked a lot of wars, like fighting over real stuff. And we're going into a period where it's like that seems to be, again, happening. I mean, Europe is getting its teeth kicked in because we don't get the cheap natural gas anymore. It's basically sinking, Germany. And then we have China that has a monopoly in a lot of stuff, and we have people saying that peak copper is, I guess, already here or something. That supply shortages are coming up. So if you all of a sudden have copper, and that, I mean, then we're talking power. I mean, like I've said before, if you own all the Bitcoin in the world, um, at today's face value 1.8 trillion, if I own all the copper mines in the world, I don't know what the whatever face value of that would be today, but sure as shit wouldn't be 1.8 trillion, I don't think. I still would have like all the leverage. I don't need your Bitcoin. You need copper to even have your network function that requires the same amount of power to power Poland. You need a shit ton of copper for that. I'm sitting with all the cards. There's nothing strategic at all about Bitcoin if you take it to the extreme. The world uh, worked fine without Bitcoin. Civilization would end in a day, the modern civilization, if there was no copper. You're sitting there with all the Bitcoin, I have all the copper. Who's making the rules in that scenario? You can't have electricity without me. Like in my case, for example, I don't use Bitcoin, I don't own Bitcoin. I have nothing really that Bitcoin, well, I don't need Bitcoin for anything. That's what's fun. It's like somebody says, like, well, oh, you need Bitcoin, you're missing out. It's like I literally can't come up with a single thing that I currently need Bitcoin for. That I mean that my life is worse because I don't have Bitcoin. And yes, of course the cheeky comment would be, well, if you bought Bitcoin in 2010, you would say otherwise. Yes, but obviously that's not really relevant in the sense that Bitcoin has no real utility for me that I lack. I can make money investing. I don't need Bitcoin. If we're gonna talk about, okay, store of value or whatever, it's like something that requires the power consumption of Poland to function, and theoretically could be. I mean, it's not necessarily capped. So it's like that. BlackRock has even said that it's like, okay, there's no guarantee that Bitcoin will be capped at 22 million coins, for example. So not even the thing that's supposed to be like the linchpin of it all, in a sense, is even guaranteed. And you don't know about technology. It's like I don't need Bitcoin for a damn thing. If I own Bitcoin, how would my life change? Nothing would change in the slightest. That's my point. There's like it's not actually strategic at all. I would find it useful if I was fleeing a country and would like to, didn't want to have gold bars with me in a sense. But there's problems with Bitcoin as well. Again, that you need that network. It's electronic. Um, it's not. I was gonna say like immortal in the sense that if I forget my key or whatever, then that could be gone. Yada yada. If I have it on a cold storage disk, maybe that disk gets destroyed. Yada. So there's a lot of stuff like that. My point is that's like you see this stuff happening. I mean yeah, Greenland, what China is doing, central banks just buying records amounts of gold. I mean, this is the strategic stuff. Commodities are the strategic stuff at the end of the day, because you can't even have your strategic technology without commodities. It's the baseline for everything. Um, and yeah, I mean, it's just incredible, like Imagine the, I mean, potential power. Let's say we go into a whatever peak copper, yada yada, and it's like your Rio Tinto, Glencore, this huge entity. It's like, oh, copper prices went to $6-7. Like, Rio Tinto is, or this combination is like, hey, whatever. They're up at $1 trillion market cap when shit hits the fan with supply crunch and stuff. It's like, yeah, they could be kind of dictating. I mean, if they control whatever amount of copper or yada yada, it's like, hey, they're probably a force to be reckoned with in that case if they control the a huge part of all the commodity supply in the world. I don't think. I think. I mean, Glencore is known to be the smart money of the majors. So if they believe that creating the largest, not a monopoly, but it's like the largest player in the commodity space, there's a reason for it. They see something coming that they think uh, they would benefit from being the biggest player in the space. And I'm not trying to do that. I'm just trying to buy as much as I can of real stuff, especially as long as it's selling at generationally cheap levels. Anyway, long rant as usual. Thanks for listening. Not buying or sell recommendation. If I mention any miners, assume I'm biased, assume I own them, assume some might be sponsors. Not buying or sell recommendation, not investing advice. Don't invest money you cannot afford to lose. You don't have to think or do anything like I'm doing. I'm just airing my thoughts here. Thanks for listening. Bye.